you have to learn how to invest, which is to put money into the things you care about and then do nothing. That is what Tesla is powering. That is what allows it to be a multi-trillion-dollar company. An investor is not a speculator, and it's not a day trader.
I mean, I would actually say that I don't like investing.
Okay.
I actually like company building. We all look at false idols a lot, and we kind of pick people and put them on a pedestal, and we want to emulate them. There are a lot of people with great ideas, and I think there are a lot of people, when empowered with capital, can do really good things. In the world of startups, in my opinion, there's as much, if not more, luck than there is skill. Revolution starts in evolution.
The thing is that when you look up the word value in the dictionary, it doesn't mean cheap. It doesn't mean a cigar butt with 2 puffs in it, that famous Buffett Munger quote. I think it actually means something that has value. And so then I'm really thinking about, what are the cash flows of this business? How does it create a moat, right? Meaning in software, some technological way that's hard for people to compete with it. And then can I get it for a price where there's a margin of safety, where if they mis-execute for a quarter or if they have a little hiccup, it's going to be okay. Because we've got an entry point where 5 or 10 years from now, this thing will be 5 to 10 times bigger. And that's how we think about all these things. And if you look at the deals that I've done, they kind of map pretty singularly one-to-one to that framework. That is what Tesla is powering. That is what allows it to be a multi-trillion-dollar company. So does it have the same return profile as when I bought it at what is equivalently now $25 or $30 a share? Well, obviously not. But can it be multiples higher than where it is today? Absolutely. An investor is not a speculator, and it's not a day trader. And I think that a lot of retail, a lot of normal people, the only way they will close the inequality gap is because they take it upon themselves to learn how to become an investor. The government's not going to save them. No law is going to save them. No, taxation of the rich is going to save them. They can save themselves. You have to learn how to invest, which is to put money into the things you care about and then do nothing. And learning that second part is super hard. And so if you have apps that glorify speculation, you're not going to teach the right kind of behavior. So of course they should exist. I believe in a free market. Am I a fan of them? Not particularly. Well, maybe I can just give you an insight into how I process any opportunity.
Sure.
Random company comes in to the top of the funnel. Immediately, I'm making a very quick, hopefully it's a decision, but maybe sometimes it's a judgment. And I'm asking myself, does this fit into my worldview or not? Meaning, is it in my circle of competence? And I have a very simple way of looking at this. Is it going to fix something in inequality that I think is important, or is it going to fix something in climate change that I think is important? Those are the only 2 things I care about. Inequality and climate change. Under inequality, there's a bunch of stuff. Financial equality is important. Healthcare equality is important. Education equality is important. So it allows me to organize a lot of different opportunities. Make something more symmetric. Does it take something that was asymmetric and fix it? So that's my first judgment, which is qualitative. That's why whenever I start my one-pagers, it's always, what is the strategy? And you can read all of these one-pagers now. And what you'll get away from them is the first lens is equality and or climate change. I, because of Facebook, quite honestly, got extremely lucky in my early 30s. But this last decade has been training. And, these last few years now, I'm really on the field. I got my pads on, and I feel like I can play as good as anybody else. But the reality is all of the things I want to do vastly outweighs the capital that I have. Probably I'm, running $10+ billion to 10, 15 billion. I don't know the exact number, to be completely honest, I should. But I am risk on, and I am moving a lot of balls down the field, myself and my team. And the reality is that those things sometimes consume capital. So at the end of last year, my family office called and said, hey, dummy, you need to put a little bit of money here just to make sure that we have liquidity and we can keep doing all these things. And so I had to sell, a couple million shares of Virtue. I didn't want to.
I mean, I would actually say that I don't like investing.
Okay.
I actually like company building. I really like the phase from an inception of an idea to that second or third major iteration of a product. That's where I feel the most comfortable, you know, from like 0 to like a few hundred employees. I love the challenge of being this David against some Goliath. I like being an underdog. I like kind of just working all hours on something, being elbow to elbow with people that just, you know, have nothing going for them other than just like a lot of chutzpah.
Right.
And that's just a really, really cool, pretty badass kind of environment for me.
Right.
I don't really like being some corpo executive or some, you know, like the problem is I think the industry in general, and I think this is the world, we all look at false idols a lot and we kind of pick people and put them on a pedestal and we want to emulate them. And invariably what happens is it's the person who shouts the loudest that gets the attention. And I think that's just, you know, that ends up never working. You don't get a lot of credit for being in the bowels of building companies at that phase. But in my opinion, that's where the most value is created. And for me, it's the most fun. So that's why I do it. There are a lot of people with great ideas. And I think there are a lot of people, when empowered with capital, can do really good things. And I'm really interested in ways where you can redistribute capital. And I think right now, capital has been aggregated by a lot of these monolithic institutions that aren't trusted for a whole host of reasons. I think some are valid, probably some are not as valid, but in general, what's happened is a very risk-averse culture by people who control the lubricant that's necessary for economies to develop. And so if you can develop these alternative capital flows and marketplaces and systems that create liquidity for individuals, you give them the chance to now build these businesses and do what they think they should do, invest in the things that they believe are worth investing in. And I think, again, in general, individuals are better decision makers than these small groups of people that kind of live in ivory towers. In the world of startups, in my opinion, there's as much, if not more, luck than there is skill. Timing, you know, the right technology decisions at the right time, a few critical hires at the right time, a few critical features at the right time. And frankly, you know, you can have a substandard group of people get those things right and beat what is on paper a tremendously better group of people, right, who didn't make those decisions.
Right.
So what you're really trying to figure out, in my opinion, is how does their mind work? Are they scrappy enough? Are they listening? Are they cynical enough to push back? And those characteristics are hard to define. And I think they're manifested in wildly varying ways. What I'm trying to figure out is whether those things exist. And can I plant enough seeds where the intellectual curiosity of the person will guide the decision, as opposed to some great rhetoric that I may spew and then they just blindly run into a brick wall because that's what they think I told them to do. Revolution starts in evolution. So you could have the biggest, craziest, audacious idea in the world, but unless you can put one foot in front of the other and make that first step, you're screwed and none of it matters. And again, all it does is it may allow you to, you know, wrap yourself in some really elegant rhetoric. Maybe it allows you to, you know, be really followed on Twitter and appear at tech conference. None of that matters. All of that crap washes out in the end. Because if you suck, you suck.
Right.
And you may be articulate, but if you suck, it don't matter, and you'll be revealed to be a sham. What matters there is, again, it's just that ability to understand what that first specific set of things need to be, with that broader, bigger goal in mind. But if you can't put your first foot in front of the other, and you know what's amazing? Most people can't. Because they get wrapped up in the rhetoric of the vision and the mission and all of this, you know, grandiose, you know, blobbity-blying, that they screw up and they're their own worst enemies.